The broadcast is now starting. All attendees are in listen-only mode.
So where are the markets headed? Well, for historical purposes, let's go back to the 1930s and look at 1932 to 1937. And you can pull these charts up on the net because there's lots of historicals on the Dow Jones Industrials. But you'll see that 1932 to 1937, some have said that period's equivalent to 2008 to 2017. Now, we all know that markets first crashed in 1929. The Dow then proceeded to lose 90% of its value from its October 29 peak to the trough set in July 1932. And that prompted the Federal Reserve to print money, which reduced interest rates to near zero. And as a consequence, debt soared during that period, though by 1937, markets had recovered a fair bit of their losses. But once money printing ended, and I believe it came to an end shortly before 37, the Dow then lost more than half of its value over the next 12 months. So that'd be basically 1937 and part of 1938. And Ray Dalio of Bridgewater mentioned in a recent interview that 2017 was like 1937, implying that we were on the brink of a major correction or major collapse even. But at the time he mentioned this comparison, global central banks were planning to materially reduce levels of QE. Of course, we remain skeptical to that sort of remark by the Bank of England and Bank of Japan, the ECB, and so forth. In reality, as we had guessed throughout 2016 and 17, it turned out to be more of the standard job booming on part of the central bankers, as here we are in 2018, and we all know that the ECB recently said that they may not be able to keep levels at where they are. I mean, they're going to try to keep them where they're at, but they may actually have to increase levels of QE should economic conditions weaken. We also know that Bank of Japan lowered its QE flow by the equivalent of $70 million a month, which is not even a drop in the bucket. And also keeping the door open to the possibility of further increasing the flow of QE, which would send their negative rates even more negative should economic conditions require that. So the fact remains that these major economies are still in the throes of stagnation and even depression despite many years of QE. And the misleading reports about so-called recovering GDP numbers only serve to confuse the situation. The US Fed has been the only central bank to tighten, but the Fed cannot raise rates faster than is discounted in the interest rate curve. So the rest of the world will continue to need easy monetary policy. And since the world's connected economically, this will ultimately impact the US such that the US Fed will have no choice but to increase QE at some point within the next year or two. And that's despite their current stance on the current and planned rate hikes. So as we've mentioned, the global debt levels today far surpass those of the 1930s. And when such onerous levels of debt have emerged throughout history, there is the inevitable collapse of fiat currencies and a massive restructuring takes place. Bitcoin and gold would be the likely beneficiaries to such a situation. Meanwhile, the Bank of Japan lowered its flow of QE by, as I said, the equivalent of 70 million a month. Essentially, when these central banks continue their QE and actually augment their level of QE, because certainly if the US Fed has to reverse what it's done in terms of interest rate hikes, the effect of QE that go around will be even less than before. If there is not an attractive investment relative to bonds, what you get is pushing on the string. And the spreads currently show that major economies are already there as they continue to print without material economic growth. And the US is somewhat close to being there as well. So to solve this issue, these major fiat currencies must be depreciated by a material amount. Interest rates, lowering interest rates are no longer an effective tool to really spur significant growth. So this currency depreciation will lead to major devaluations in fiat. And my guess is this is one reason why Tim Draper recently said that in 5 years, if you try to use fiat currency, they will laugh at you. Bitcoin and other current cryptocurrencies will be so relevant, there will be no reason to have the fiat currencies. That was a quote. And then Jack Dorsey, who's the CEO of Twitter and Square, believes that Bitcoin will replace fiat in a decade. And in a recent interview, he said that he's sure that Bitcoin will be the only currency after 10 years to be used globally, and there will be no other major currency by comparison. Now, these are strong statements from both Draper and Dorsey, but I've connected the dots for members on how this can occur in some of my recent Crypto Corner pieces, as well as earlier ones, but those are written under nom de plume. So in today's market, bringing up to the present here, one question is whether the U.S. Markets can continue to fall or rather find a floor sooner than later. And given that many technology stocks are now trading below their 50-day lines, it would seem further correction is due, but QE continues to flow near record levels from major central banks, so remains a formidable force as money tends to find its way into US stocks. And this tug of war between a market wanting to correct while QE continues to flow may continue, and along with these elevated levels of volatility, which could send the market sharply in both directions, as we've been witness to so far over the last several days. So meanwhile, it just remains best to focus on your stocks as always. That certain positions will provide profitable opportunities, such as undercut and rally patterns, while always making sure you keep stops real tight in this highly volatile environment. FANG stocks remain on the ropes. Certainly the NASDAQ has been weaker than the S&P as Amazon continues to weaken on concerns that the Trump administration may go after the company on tax issues. Then we have privacy issues with Facebook, which remain a deep concern. Netflix right now is trying to get support at its 50-day, and Google is trading right around its 200-day. So should be interesting times ahead and volatile times ahead. Gil, what's your take on the situation?
Well, we have one question. Somebody's wondering and saying, the U.S. dollar is a fiat currency. How could we not have it in 5 years? Can't see how that would happen without a total financial meltdown. I think Tim Draper's point in that people wouldn't be using the dollar in 5 years and be using cryptocurrencies. I don't think it means that the dollar won't exist. It's just that people won't necessarily be wanting to use it. So,
right. It's a phasing out, basically. It's a transition from fiat currencies to these decentralized digital currencies. Namely, Bitcoin is really the winner-take-all because of its network effect, and also because demographically, there's going to be about 3 billion people who are going to be coming online via cheap cell phones, cheap mobile phones, so that they will be able to, for the first time, to have some form of banking in their infrastructure. And the numbers are just quite ferocious in terms of what lies ahead over the next few years in terms of the number of people who are going to be signing on to Bitcoin. And that's why you have a number of people who have said that their belief is that Bitcoin will be the coin that remains standing compared to all the other coins. Whereas there's other views that are a little bit more moderate views, saying that Bitcoin and other coins can coexist because the other coins bring valid technologies to the forefront via blockchain. My own view is I think either or. I think it is possible that we could see a Bitcoin as the last remaining man standing based on the direction the internet took. Some of you may remember back in 1993, 1994, TCP/IP was the first technology and established the network effect very quickly. But you had superior technologies to TCP/IP that emerged later on, and none of them ultimately stood the chance because the TCP network effect won out, and that is basically the backbone of the internet to this day. So on that basis, I think that Bitcoin has a fair chance of being the last man standing. On the other hand, you got Ethereum and valid technologies based on blockchain that are certainly going to be useful to the marketplace. The argument, of course, is that Bitcoin can handle all those technologies as it continues to evolve. And so it can effectively replace Ethereum and all these other excellent technologies and basically be the equivalent of TCP/IP for the internet.
Okay, so I mean, so that's that. That's the whole thing. Today we've got obviously a rally going on, and I think there's a context for at least a bounce here because you have the S&P is holding along the 200-day moving average, and just sort of bouncing along. It retested yesterday and it held, and now you're bouncing. And I think it's kind of logical given the long 3-day weekend ahead of Easter. So I don't really see it as abnormal. You can see on the chart, within the context of the overall chart, the bounce, although it's about 1%, isn't really that big within the whole context of the movement we've had. But I mean, you are down there, so you could rally back up further. That's always a possibility. Or you could just bust support at the 200-day line and go lower. So the NASDAQ is kind of floating in midair. So I mean, I guess if the S&P busted the 200-day line, then you would see the NASDAQ probably head for its own 200-day line and head lower. So that's probably what you're looking at. Anyways, other things going on. Amazon deep in its pattern. One of the stocks we said to keep an eye on yesterday was Nvidia, mainly because it's just undercutting its prior low here. So you get a rally up out of here, and it's trying to turn. But I mean, this kind of stuff to me is just good for a trade because I don't know if these are going to become longer-term buy points. Square trying to bounce off the 50-day line. It came all the way back to the cup handle breakout, which was here, and now you're right on top of it. So I don't know. This is a small bounce within the context of all that. Dr. K, someone has a question for you. What will be the next catalyst to push Bitcoin prices higher?
Well, I think the next catalyst will be, these 3 billion worlds unbanked or marginally banked that are going to be coming online, because that will dramatically drive up the number of users of Bitcoin. And the value of the network is based on the square of the users. So I think that's going to be tremendous. I think that right there, that alone can push Bitcoin into 6 figures, into the hundreds of thousands. Plus, we are seeing some evidence of Bitcoin being used more and more as a store of value. And I think there will be a catalyzed effect at some point where people just wake up and they realize that Bitcoin is a hell of a lot easier and superior than gold. And right now, gold sits at about $8 trillion globally. So if you even get a 10% drain, that's $800 billion transferring from gold into Bitcoin. What's Bitcoin right now? Bitcoin's right now about 200 billion, 150 billion market cap, something like that. So these are big numbers that I think are going to help Bitcoin find a floor, work out its basing pattern, and then rise to new highs. And as far as the time frame of that, I would guess based on the technicals that we could see the base, the bottom of the base, be established within the next, say, 3 to 6 months, and then perhaps we round out the right side of the base by the end of the year or early next year. And then that means that by 2019 we're going to see Bitcoin achieve new highs. And when it does that, it tends to move at least 10-fold, 20-fold, so that you know, by the if it does one of those signature moves, and those 10 and 20-fold gains generally occur in a matter of weeks, we could see Bitcoin say at 200,000 sometime in 2019.
Let's see. Somebody's asking about BDX. Well, I mean, this you could say this is a head and shoulders. It's got all the classic, features of a head and shoulders. You got the big break off the peak, but you'd probably, if you're going to try and short this, you'd need to see a rally up into the 50-day line, which would be up here, or maybe the 200 or the 20-day line. I couldn't really. I certainly wouldn't short it here, so I'm not really sure I'd short this here. The other thing is, in this market, you get these head and shoulders formations and they don't really play out. So they look textbook in the sense that this looks like it's pretty screwed up and it's going to just bust. The neckline is declining and it's just going to break to the downside. And then it doesn't happen. So I think if you're going to try and short something like this, you kind of have to anticipate it higher up in the pattern. So up closer to the 50-day line and try to catch it there if you're going to do it. So not really something I would be looking at doing. So at least not with the market in this position. Notice how this kind of mimics the S&P. So unless the S&P busts the 50-day line, then this probably doesn't have much of a chance of breaking down either. And it's probably oversold at this point to the point that you'd probably get a bounce in it. So anyways, some of these other focus list names, I think some of these are done. AMAT, it could be a late stage failed base. I think in this position, you're undercutting this low, so I think you're getting a little undercut and rally move. It could take a little further into the 50-day. Then it may become shortable there. It could rally into the 20-day. It could become shortable there. So, one to watch, I think. I don't know if this is a long in here. It's probably going to depend on what the market does, but you're seeing a lot of these names break down. This is a double bottom breakout, and it's not happening now. So let's see here. Here's the double bottom. And that was a breakout here that you had. We put it on here as a pocket pivot, and that it's failed. I mean, once these things break the 20-day line and the breakout point, you get a little rally back to the upside, and then it just completely fails. So a lot of times what I'll look for on these is the breakdown through the 20-day line and the prior breakout point. That initially tells you that this thing is starting to fail. And then you get a rally, and of course the rally might have scared you away from doing anything here because you started up or you went up on Monday and the rally was very sharp, and then it just kind of gave way at the 10-day line. And now, after the reversal on Tuesday, which was pretty hairy, it's now busted the 50-day line, and now you're trying to rally back above the 50-day line. So this could, this is probably in play as a short if the general market continues lower. So anyways. Let's see what else. Baozun has been on the focus list. A lot of these things have been tagged pretty good. This is sitting underneath the 20-day line. Notice that it's undercut this low here. So the possibility exists for a rally back up through that low, which would trigger an undercut and rally. So right now, you're sitting here. Your low is 45.01. You're trading 44.46. I guess if you had a move up through that low, you could try and come in on it. So that's a possibility. Fortinet finding resistance at the 10-day line today and trying to hold along the 20-day line. Notice how you undercut this low here, which was 52.22 yesterday. You closed at 52.28 and you rallied slightly off the low, so you closed back above that low. And now you've rallied back up. That was good for a trade. It's stalling out at the 10-day line. I don't know what it does from here. But, you get these trades when the market's oversold like this and you're looking for undercut and rally moves as potential trades. And in some cases, they work pretty well, at least for a trade. So here's a team which is undercutting this low, I guess, and didn't quite undercut this low, but this is a late stage failed base now. And you had the breakout up here, and then notice how once you fail at the 20-day line, you rally back up into the line, and now you roll back through the 50-day line. So your short point, if you were watching this, was here on Tuesday. And I don't know if anybody would have been trying to short it. I shorted some things that day and got away with making some money, but it was kind of a crazy reversal. It all kind of came apart all of a sudden, and so it looked kind of funky. And it was a bit surprising, but it just blew to pieces once it blew to pieces. Light is a little concerning. Well, not a little. I'd say it's a fair amount concerning to me, because you had, I don't know, maybe it becomes viable in midair, but you had this breakout here. It came straight up off the lows. So the pullback here on the daily chart drops through the 65, 66 level, which is the breakout point. And you cruise right through the 20-day line yesterday, you gap down, and now you're trying to rally back. I don't know what volume levels look like right now, but maybe they're pretty good. But it's sort of in no man's land here. I guess if you were looking at this, let me check. It's close to the 10-week line on the weekly chart. So, I mean, this one's a tough one because there's really notice how there's no areas of congestion in here. If you had some price congestion like in here or in here, then you might have some better support, but it just came straight up off the bottom, so it's kind of hanging in midair. And where it goes from here is kind of like, who knows? Maybe it rallies further back to the 20-day line, or maybe it rolls back to the 50-day line, but you're kind of in a no man's land situation where the only low that would constitute an undercut and rally point would be right here. So this low here, and you're way, way below it. So the other possibility might be the 20-day line. Tough to say. So anyways. Netflix is bouncing out the 50-day line. It dropped below it earlier today. I'm not sure. Let's check these lows here. You're getting an undercut and rally through this low this morning, and it's trying to turn. They announced today that they're going to hire Susan Rice as a, I don't know, what is she going to be doing, a show or something? Anybody know? Oh, she's on the board of directors. Okay. Let's see. Somebody's saying, Gil, I struggle with buying stocks that I've set alerts on when showing good action, but then end up with too many positions. These stocks are not on my watch list, but none of them show good behavior. Please comment on if you only buy stocks on your focus list or watch list, or do you also find yourself buying other stocks when properly triggered? Well, I buy all kinds of stuff, so anything that I see that's setting up, I'll go after. It doesn't have to be on the focus list. It could be something entirely unrelated. So, but I don't focus on a large number of stocks. I'll pick on 2 to 3 and leave it at that. So, anyways, in terms of having positions. So, but I try to watch maybe 20 to 30, and on a daily basis, I have my action list, which is hopefully less than that, and I'm just moving into them as I see them set up in real time, and a lot of times I'm just swing trading them. So, and in this market right now, I think that's really all you have, is it's just a big swing trading environment. So. Any other questions? I'm going to finish off with Amazon and Well, we already talked about that, but I mean that's down in the pattern. It's getting picked on by Trump. We'll see what happens here, but BlackBerry just getting cracked wide open. They're cracking the crackberry. Notice how it's undercutting this low here, so I don't know if that triggers an undercut and rally, but this is looking pretty grim right now. I don't know if you can get a rally, undercut and rally here, but you had a big outside reversal. They came out with earnings in the morning. I mean, I was thinking it was coming out, they were coming out in the afternoon. So I wrote down, or we sent out an alert telling people to watch for the report in the afternoon. It came out in the morning. So it's kind of like neither here nor there. But the stock started up to the 13 level and then reversed pretty hard on heavy volume. So that's kind of cooked it for now. I don't know what you do here, but that's probably gonna, well, I'm pretty sure it's gonna be removed from the list. Any new merchandise? I don't see anything that really thrills me. You know, Planet Fitness is over here trying to hang along the 10-day line. You know, we've seen Team, which is relatively new merchandise, breaking down. AYX, Alteryx is trying to hang in there, but it's probably just building a base. What are some of the other ones? SendGrid was another one I've been watching, and notice how they're all hanging in there. Stitch Fix underneath the 50-day. It looked like it was going to come out of there the other day. You had to move back up through the 50-day line on some volume, and then kaboom! It's been tagged with the market, and it's coming in. It's undercutting these little low. I don't think it undercut this one, but I think it undercut this one. But that wouldn't be a low because it's a rally. This would be the low in here. So not sure what to make of this, but that's one new merchandise. Do you have any, Scotty, that you've been watching? KL for my list last year. Yeah, this is a gold stock, and gold is like all over the place. You know, here it is. It's rallying here one day, it's gapping up, and it's busting the next day. So I don't really see this as something I can necessarily play in any coherent fashion because it's just flying all over the place. And I think right now you're in a situation where the news is all over the place, stocks are all over the place, and it's just very tough to get a handle on things. I think just about everything here is a trade, so, and that would include things like Kale, but I don't really see that as something I want to buy. SSTI is a shot spotter. That's acting well. Let's see, PAGS, but I mean, you're not going to buy it here. PAGS, that's acting well too. So, but these aren't, you know, things that you can necessarily buy right here, right now. So they're extended, and I guess they were acting well yesterday, and you could have bought them on the pullbacks, but the idea that you're going to jump in on them now is sort of a stretch. Lulu was a Bible gap up yesterday on earnings. We saw that. We just not sure. Phyllis Van Heusen was another one. We just weren't sure about these, and I'm not sure about this one either because this thing's kind of stalling in midair. So I don't know what to make of this. PRGS, another one. What's that? Progress Software. I mean, what about it? But thoughts? Yeah, you should have shorted it today at the 20-day line. That would have worked. Market's rallying again. So I've been trading the SQQQ today. So it had a nice move at the open, and then it ran up and was a sell, and then it went all the way down to 1840 and turned around. And I just puked it out at like 1886. Now it's coming into 1860. So, I mean, I think some of these ETFs, even the UVXY, can become very tradable in a market where you see the Dow spinning around 200 or 300 points in a few minutes or within several times during the day. Was it like, was it Wednesday or Tuesday? Well, Tuesday on the big reversal, I remember it was up 100 at one point, then it reversed to almost unchanged or negative, and then it went back up 100, and then it went back down towards the flat line, and then it ran up to over 200, and then it blew up. So it's wild action, and the stocks move all over the place. It's very difficult to get a handle on things. I mean, I don't know if anybody in here on this webinar is able to accumulate stocks and make tons of money that way in this market because most everything has been busted. And you look at leaders, even Twitter, busting, a nice cascading formation on the way down. Boom, boom. That's very orderly in a sense. But it's trying to rally back to the 50-day. This might be a short. I don't know. What's his face? Citron is short this turkey, and he's saying that they've got some real issues with their personal data, which may be true. So I don't know. Like Facebook, and Facebook's been getting clocked. Obviously everybody's that's kind of an old story at this point. Today you're getting a nice rally in the name. We'll see if it's able to come out of here. So, any other questions? Somebody's asking, would you cover Tesla short today as it cleared yesterday's high? I don't think I would be doing a shortable gap down here on this one. This is probably shortable up closer to the 50-day line, so I don't really view it as something to be shorting on the gap down move. You're currently short it? Okay, but I don't know. I don't think I think if it goes back through that high and you tried shorting it as a shortable gap down, then you're out. Let's see. I found BGUs were working. Recent BGUs include Lulu and PVH. Someone's saying, well, yeah, they're working right now. Somebody's saying the Van Tharp book, Trading Your Way to Financial Freedom, could be useful for the member working through position number, position sizing issues, help to bring me in line with your simpler 3-position system. Okay, let's go through that book. What is that? Van Tharp book, Trading Your Way to Financial Freedom. Do you think we retest February lows? I have no idea. Maybe we do, maybe we don't. But I'm not going to try and guess. I'm just going to go with the action as I see it. Debating covering Tesla or not on this continue. I would say you probably have no choice. I mean, if you shorted yesterday down lower, you probably should cover it if that's your stop, unless you're giving it like a % or 2 above that. So I don't know. I don't know what to say at this point. I mean, the short side has worked very. You sort of have to be very quick and very opportunistic, and then it's not really clear that you're going to make a huge amount of progress on the upside. So, in terms of profits, because progress on the downside. But I think a lot of this stuff is opportunistic and swing trading at its at its most basic. You had an undercut rally on this thing here, and then it failed. So you might have been long this thing, and you could have flipped short here once it broke support, but that's kind of in the middle of nowhere. Now you go after it on a shortable gap down here, and it's kind of down there. So a lot of times these work better if it's come off of gapping down off of resistance like the 50-day moving average. So this is a little more difficult. NCNA, someone's asking about. It's setting up. It's a new merchandise name. It's setting up in a base. It's a little bit wide and loose if you look at it on the weekly chart. So I'm not so sure. Somebody says, would it be great if you could share your HESI filter ranking settings for your intraday stocks list? I'm not sure what you mean. You mean this? All this is intraday percent change one day, intraday percent price range. Where is it trading in the price range? So in this case, AbbVie, it's in the upper 66% or 66.67% up in the price range off the lows. AMAT right now is in the 89.9%, so that's where that's useful. It gives you a sense of how strongly these things are trading. And then of course here's the volume, which I can sort intraday percent change in volume versus the 50-day moving average on an intraday basis. So that's basically it. Intraday estimated volume, all the normal stuff, ERG, EPS rank. So pretty basic stuff. So check out Edge as a warning to biotech investors. Failed drug tests yesterday. Well, why is Edge a warning to biotech investor? I mean, whoa, I like that. It's like a 90% decline in one day. A no play.
Yeah, this is why it's important not to invest more than a certain percentage of your portfolio in any one stock.
Yeah. Somebody's asking, how do you build the Gizmo buy list? I mean, I'm just going through stocks every day, and I add names to the list as I'm going through my screen. So some of these, this is an older list right now. This is a 3.5 one. I've been watching it because there's a lot of stuff that's just been beaten to hell. Facebook, Micron's been knocked down, Intel's been knocked down, Netflix, Square. I mean, all of these things now does almost look like a short list. Tesla was on my watch list for a while because it looked like back here early in March, it looked like it was trying to go. Snap, piece of garbage. BlackBerry busting, turned into garbage. Sad, but true. Steel, AMAT, eBay, JP Morgan, all of these things have gotten smashed. And now I'm building a new buy list because everything has been beaten to crap, and so there's nothing really that thrills me. I wonder if Bitcoin is a buy here again.
I'd be careful based on its trajectory. I'm expecting lower lows, and I think
looks like
the bottom of the base may not occur until, like I said, later this year. That could still be 3 to 6 months off.
Right. So
based on its price history, we're seeing something substantial in the correction that we haven't seen since early 2014, or say 2011, 2010. And so when you have that kind of selling pressure, usually it takes a while for the base to trace out. That's why my prediction is that we won't complete the base. In other words, Bitcoin won't see 20,000 probably until the end of this year, or it could be longer. It could be middle of next year.
Okay. Sorry, I'm a little distracted. I was dealing with something over here. Today's end of the month day, so we do all our accounting and banking at the end of the month around here. Anyways, HRS holds well in this market. Harris Corp. I actually remember way back when I first graduated from Stanford, I actually worked at Harris Corp, a temp job in the accounting department. I forget what I was doing, some data entry or something. But they're a defense contractor, electronics, they were at least back then. So I noticed defense contractors in general have been trying to do a little better, but nothing really terribly thrilling in here. So hard to say. I mean, see, notice how these are trying to base. Would you hold any positions over the long weekend? No. I mean, I wouldn't. You could if you want to, but why would you ask me that if I said, yes, I would hold 50 positions over the weekend because I have a crystal ball that's telling me that we're going to rally like mad on Monday or whenever. When do we open up again? When does the market open up? Monday or Tuesday?
Monday.
Monday, yeah, because we have tomorrow off. That's right, duh. All right, what about some other intelligent questions? None? I mean, what else is there? You know, if I look at some of the names we put reports on, they just died a miserable death. I think Etsy might be hanging in there. It has been, so it's been doing okay, but still not terribly thrilling.
Yeah, a lot of in the last few weeks, tech stocks have really taken to pummeling.
Yeah, they're just getting brutalized. I mean brutalized. Let's see. Nutanix is trying to rally. It retraced about half of its prior upside move. Here's the breakout. So you run up, you trace. I'm going to say, what does that look like to you guys? Like about, if I draw it out this way, does that look like about halfway? Yeah, pretty much, huh? Look, Fibonacci in action. And it looks okay. MTCH, Match.com. Hanging in there. SGH, Smart Global Holdings, that's hanging in there too. So, you know, I can't say they thrill me, but looks kind of interesting. Market's coming in. I don't know what they're going to do with this thing today because it looks like it's just going all over the place. GDI trying to set up a UNR. Gardner Denver. Yeah, it's trying to. It's just not doing it. There's no real thrust. I think I'd keep an eye on some of these others. Cat, you know, they're all like looking similar. Deer. I think it's a machinery stock, or GDI is. Is there good literature reading on mechanics of order entry and use of stops, etc.? Mechanics? I don't know. My mechanics are, I put my finger on the mouse button and I click on the buy button with my mouse. Those are my mechanics. I don't know, you know, about mechanical trade entry. I'm not really sure what you mean by that. And someone's going to give you like, you know, if X, you do Y. And this is how you enter orders in, you know. You find your point where you want to buy the stock and you start clicking, you know, the buy button. That's what I do. So I don't spend a lot of time you know, worrying on the mechanics. Like something has to tell me when I start buying. If it's at the buy point, I buy it. If it's an undercut and rally and it's coming up through the low and it's clearing it by a couple of cents, I buy it. And that's basically it. I don't have some mechanical system that's telling me what to do and when to do it. So let's see. Somebody's asking about the LOL. Oh, wait, they were laughing at my comment. Akamai is hanging in there. That kind of looks interesting. Right at the top of the breakout. I kind of like that. It's a little bit on the slow side. Let's see. Switch seems to be building a base. It has seemed to be building a base for a long time. This is what the base looks like. And it just keeps making lower lows and then trying to bounce and going nowhere. Do you look to Fibonacci at all with overall market pullbacks as a supporting indicator or not at all? I would say not at all. I don't really look at it. I mean, I think you can look at things like, you know, Nutanix and you see a 50% pullback. Sometimes you could say, okay, maybe that's a buy point. And you come in and buy the pullback, especially if it like merges with the moving average. Here you're not really getting any of that. So I don't know. Any more questions? I mean, personally, I don't really have a huge amount to say other than the fact that everything has been raked. So now you're looking at, you know, where do you buy these things? This is Red Hat the other day. This was a Bible gap up that didn't quite work out. So not everything has been working. Here's another one. Shop was acting really well, and then it just kind of blew up. I think its cousin is Wix, and that also came off. Chinese names all got smashed. Sina, Baba. We already looked at Baozun, which is kind of hanging in there. Momo went down to the 200-day line and bounced. Is it a short? I don't know. I mean, it looks like it is. What other ones? Weibo. Not good. Wooba. Whoops. Not good. Hanging out. Well, it's trying to hold the 50-day line, I guess. So maybe it's a little better. At home, trying to hold the 50-day line, but not really. What else? UVXY. Do you use a 620 for day trading it? Well, yeah, I talk about that all the time. So you must be new.
Yeah, just go to the FAQ section of the site and type in 620, and you'll pull up some articles
You can
on
learn
how to
all
use.
about the magical ways of using the 620 chart. I was gonna find see what it's doing now. Let's take some of these charts out of here. Look at that. There it is. It's trying to turn off the lows. So maybe you're gonna get a push. You actually had a buy signal here on the MACD cross, and it came in, went up, came in. Now it's heading back higher. So how about you could also use it to trade the skews, SQQQ. And yeah, that's kind of hanging out. I don't know. I think things are a little bit sketchy in terms of where this market's going to finish, because you got a short, or not a short day, but you got a long holiday weekend, and I don't know if you're going to see a lot of movement outside of what you've already seen. So I'm watching this BlackBerry, and it just keeps trucking lower. It's like, wow, nobody loves that thing anymore. It looked so good for so long, and now it's just trash. Sad, but true. TSG. Do you still see enough positive market signals to have a long bias, or has there been a drastic change so we should look for more shorts? I don't really have a bias, and I would say that the way the market's acted over the past few days, by definition, you don't have a long bias. You have a sell me and give me the hell, sell my stocks, get me the hell out of here. So I don't know. TSG, Stars Group. That's interesting. That's a pocket pivot by 1 day. A little late though. DBX, Dropbox. Been trading for 5 days. Looks okay. Kind of interesting. So should we look, has there been a drastic change so we should look for more shorts? That's the second half of that question. I mean, I guess you look for shorts when the market's going down. At this point, you're going to start looking for shorts with the indexes down where they are. I guess you can, but I think for the most part, you're looking at things potentially rallying rather than breaking down as shorts right away. I mean, I would look for things that have broken down, rallying up into resistance. So that's basically where I'd be coming from on that. Any other questions? I mean, what else is there to be doing? What are you going to do today? You're going to start going long heavily? I don't know. It seems a little sketchy. Hopefully your Easter basket will be filled with new ideas or bottles of vodka. Yeah, I'm hoping so too. How many stock positions do you typically maintain? Usually 3 or 4. So if you're late on a pocket pivot, do you buy it, forget about it? I wait for a pullback. So your last answer is correct. I'm not going to chase things at any point in time, especially when they're extended. So if I see a pocket pivot, what that does is it flags a stock to me, okay? But it also it flags it to me and puts it on my watch list. But at that point, it's extended, so I'm going to come in and look and kind of keep it on my watch list and wait to see if you get a pullback. I mean, you often have that happen. And of course, BlackBerry has been a good example of that because you get these pocket pivots like here, and then it drifts back in and undercuts the low, and then it rallies out of here, another pocket pivot here, and it drifts back in, and then it kind of runs out of gas up here and rolls over. But you can see that when you have the pocket pivot, it's an indication of strength, and then you can come after it on the long side later on. So if you get a nice orderly kind of pullback on light volume, you can see that the latest pullback is not orderly. It's kind of looking garbagey. CLDR, is it a pod? No, I don't think so. It's a big double bottom, so I don't. You could try and say it's a pod, but a pod is a pod only if it breaks down. So just because you can say, oh, this pattern is a big deep cup, this is a pod. Yeah, I don't think you can necessarily say that here. So, I mean, again, this is the label method. If something's a big deep cup and you say, oh, it's a pod, then what does that mean? Do you just like willy-nilly just short it up here, or do you wait for a breakdown? A pod is as a pod does. So you'd have to look for action on the daily chart. So let's go over to the daily chart where, let's see, let's shrink this baby. It's something that would tell you that there's potential for a breakdown here. I mean, this thing's extended, so you can see you had pretty good pullbacks the last couple of days, but now it's just kind of hopping around and not really in any coherent position to do anything.
Yeah, on a percentage basis, pods generally are they correct much deeper from peak to trough. This is only corrected 50%.
Yeah.
So it really wouldn't qualify.
For a pod, you have a fixed definition of the depthness. Yeah, really deep. Read the book on short selling. It'll tell you the depth isn't necessarily, the precise depth isn't so important. What's important is the idea that a once hot stock breaks down and it turns around and goes back to its highs, and it does so rapidly without spending any time consolidating that it ends up not being able to sustain the move because it's gone up so fast off the lows on the second run. If you look at Cloudera, it's taken some time and been very slow, and consolidated and shifted around, and now it's way up at the high. So it's had some time to consolidate. A lot of times, what you see in a pod is straight down, straight up sort of action. And I'm trying to think of a good example that is a recent one that really busted, but you haven't seen some of those for a while. You might say this was more like it, although it did spend some time consolidating in here, but I don't really see how you just short something based on some perceived pattern. It's got to show you a breakdown. Once it breaks down through the 20-day or the 10-day on the right side of the big cup, then perhaps it is a pod. Somebody's asking, what is your typical percentage position size? I mean, it can be anywhere from 50 to 100 or more. So I don't have any typical anything. So anyways, where are we? Any more questions? I want brilliant questions. How's Baba doing? Yeah, it looks like garbage. I think I was going through the Chinese names. What are some others? NetEase. Not looking so hot. Look at all these things are blown up. And for a while they were acting well, even as Trump was paying lip service to all this talk of tariffs or tariff war and blah, 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 blah. And they were hanging up there and hanging up there. All of a sudden, boom, they all just went last week. And they've continued lower in many cases this week. So, and you had a quick rally on Monday in a number of these, basically because there was some cooing that China and the U.S. were going to sit down and work out their trade differences. And there was some cooing from China, and I'm not sure what the source was. I didn't really check it. That they were going to import more chips in order to offset their deficit, or their trade surplus, rather, I should say. Anyways, where are we? Are you buying pullbacks in this market? Someone's asking. No, only as a trade. Not as a say a position building type of thing. Recent IPO ZS. Zscale. I don't know. There's no setup here. It's just a hot IPO went up and then it's blowing up. It needs to base probably. What would you look for to go long BB? A white flag. Well, I think the only thing you're looking at here is you're going to undercut this low, or this low, and rally back up through them. You've already undercut this low. You may be trying to undercut this low, but it's not a key low. I think this is the one and this is the other one. So that would probably be, those would be my two choices. So let me clean this up. One low, second low, and you're undercutting this one here right now. So that would be what? 1176. So you're a ways from that. So it would have to come back up above that. So markets rallying again. Here we go, off to the races. So very deep corrections patterns are failure prone. Well, very deep patterns followed by very sharp rallies to the upside. So the best pods are the ones that last 10, 11 weeks. Some will be 20, 28 weeks. You'll see. But the basic idea is that they go straight up. And I'm trying to think of what would be a great example to whip out from the past. And I guess, let me see here.
Oh yeah, there's a lot of ones from the 90s, obviously, like Ascend.
2008 was a good time, but I think I'm trying to think. Maybe there's one. I mean, if you read the short selling book, you're going to find plenty of these. But if we go back to this was a pod because you went from 130. This is actually a pretty good one. I think this is in the book. But you went from about 130, just underneath, to 60. So you declined 50%, and then you jam right back up in, well, let's say 1, 2, 3, 4, 5, 6 weeks, all the way back to the highs, and then that's it. Kaboom. Bye-bye. And it breaks down, and the break was pretty ugly. How did I get opaque like that? I don't know. I like this color better. No. How about black? I don't know. Anyways. And then this puppy just came apart. If you look at this, it just totally, you can see from here, there's the pod. It doesn't look like much of a pod at that point, and that thing just totally blew up. Anyways, a pod is also known as a V bottom. It's a big V pattern. So, and I think the essence of all that is that what happens is the rapid run up the right side. Again, it's usually a short duration. So there's no time spent consolidating. So these were, the solars were hot. It's had a big move, and then it broke down, and so this is like, it is sort of a big V shape. Some of them can be a little more U shaped, but the essence of the whole pattern is that they go straight up and straight down. And I think there were some good ones like, is Dry Ship still around? It is. And this was kind of a double one because, but it was very short. You had this big pullback, and this was your low, and then you were straight up from there. So very, very difficult What am I doing? Very difficult to sustain when you're shooting up that high. And you had one breakdown here and then back up higher. Anyways, it's 10 o'clock and I think we're done. So someone's saying thanks for all your comments today. Happy Easter. Same to you. Somebody says, so very deep patterns are failure prone. How do you define a good base? Well, a stock that holds up tight and shows a lot of tight areas, you know, like O'Neill would. Anyways, that's all we've got, you guys. We're done. Time to go visit the Easter Bunny or wait for him to visit or something like that. Anyways, you guys, have a good one and have a great long weekend, and we'll catch you next week. All right, take care.
So long, everyone.